I don't know, you should be seeing patterns. So yeah, yeah. So yeah, keep me in the loop on that because I don't know what else could be going on with that. I've tried a couple of different ways of installing it, and I cannot figure out why it's not showing your patterns. So the only thing I could think of when me and Angelica did it was I know that they work with JAFX, that broker, when they had like tried to put it all together to develop the scanner for more consistency and reliability and all that stuff. So we tried it on that, and that's where mine is installed on that broker. And so Angelica tried it, and then hers did the same thing yours is doing, essentially just the white screen. So I want to see if hers was able to connect on Friday or not. If she's able to jump on, then if that's the case, we can just install it on JAFX. But okay. 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 All right. Yeah, definitely keep me updated on that. And then if anything, and I'll show my screen real quick. Well, share screen. Because I have it on JAFX, and then I also have Traders Way. I don't use Traders Way as a broker. I just another one to really just have the scanner on. So I have it, in two different brokers accounts, just in case as well. So if you get one to work, another one should work in theory. Um, but sometimes, like I said a while ago, sometimes like I'll notice like one broker might be slow or they might be doing updates. So I'll just jump over to the other one to kind of have it. All right. Okay. Since Thursday. Okay, let me log into the web-based version myself and see. I know they did some website updates to make the back end of stuff work better, but I didn't think it affected the scanner. Let me see. Hmm. Goes to show you how much I actually log into the web-based version. Okay. Okay. A lot of short-term trading. Did you see any like hour setups or anything? Yeah. Yeah, it's easier on the longer time frame, but if you're doing like 15 minutes, you got to be thinking real quick to yeah. All right, let me get to the web version here. All right, login. It's too many stuff. I can't remember all these websites. So tonight we'll kind of talk about some oscillator stuff. All right, yeah, so I can log into the web-based version too, no problem. So yeah, once you get your account figured out stuff, well, so I want you guys to definitely have it so you can actually start playing with it on the demo. Okay, no problem. All right, Sandra, if you got anything, let me know. And then we will do some drawing here. All right, I'm gonna clear up this screen and make sure I hit the record button. All right. All right, so here we go. So let me do screen share. Need that. Now, if I pop between Thinkorswim platform, which is going to be this platform, and the MetaTrader 4, it's only because I really like Thinkorswim and I use it a lot more for my charting. But I'm gonna try to like chart this on MetaTrader 4 because learning one platform is already hard enough, and not having to try to learn multiple ones. Where is that echo coming from? Hold on one second. Okay. Screen share. All right. So we kind of talked about last week how to kind of use the scanner to look for potential trade setups, but then still using support and resistance or candlestick patterns. If you get a chance to watch a candlestick pattern video, how to kind of do your own analysis on top of the harmonic patterns. So we're just going to kind of build onto this and kind of just have another layer of tools that you can kind of add to your toolbox. And a couple of those tools are known as what's called oscillators. So they're really just a whole bunch of like mathematical calculations that look at the prices back in history and determine, based on how far and how fast these prices move, whether the prices are overbought or oversold, or if there's a lot of people in the market, or the prices are just really, really cheap. So in order to kind of look at the oscillators, I'm going to bring back over my not market watch tab here. Strategy tab. Where's my tab? Expert advisors and indicators is what I'm looking for. So overall here on the left hand side, you have a whole bunch of different tools that you can just use. And a lot of the main ones, if you want to kind of go do some like extra studies on different really good ones for Forex in particular, or the CCI. I don't use it too often. In fact, I barely use it. But it's one of the ones that I kind of like if I'm just like really studying, doing some really hardcore analysis of the market. MACD we'll kind of talk about a little bit tonight. RSI we'll talk a little bit, and stochastics. And then when we do those 8 o'clock sessions, we'll kind of just like dig into like one of those for like extended period of time. So, but they all kind of work the same way. You're kind of looking at the same thing with each of these oscillators, but they do have different things that they're actually looking at specifically in the market. All right, so let's kind of look first at MACD. Not one of my favorites, but not one of my favorites in Forex, but I do like it more when I'm looking at stocks. And so what the MACD is basically a moving average divergence indicator. So it's looking for when the market is overbought, when the market is oversold, and when the market is kind of out of alignment per se. I don't like the MACD on this specific MT4 because it doesn't really give you all the data to make sense per se. Like down here in the bottom, you see that you have this red line, and then you have the volume bars. This is what these gray bars are volume. And I really don't like it here. I like it more so on Thinkorswim. And let me bring it up here because I had to move all my stuff on Thinkorswim this weekend. And it's been a while since I had it on here. So add that D. Come on. Let's add it. Where's it at? Let's add it. MACD. All right. And so MACD down here on this Thinkorswim are these two lines, the yellowish line and this teal line. And when you're using MACD, you're looking for when these lines cross over. And when the lines cross over, these are your buy and sell your indicators. So let me kind of scroll back here in time so you guys can see some of these. And let me get rid of RSI for now. Okay. All right. So this is on the USD JPY chart here. And down here at the bottom, we see our MACD. Now, when you have a crossover from this teal line going underneath the yellow line, or vice versa, when it's a buy signal, they really are just signals that the market prices are crossing over, and that you can start to look for these potential buy and sell setups. Now, you don't want to use these again by themselves, just like you don't want to use support and resistance strictly by itself, or candlesticks strictly by themselves. So it's another tool that you can kind of use. So let's say you see a setup that's on the harmonic scanner, and it just so happens you pull up the MACD chart and you see a crossover is happening as well. Then you have two different confluent reasons to get in that potential trade. So the MACD here, we see that this teal line is crossing down below this yellowish line here, and this is our sell signal. Once we see the crossover actually complete itself, and then you might look at the candlestick pattern formation as well, then you can look to get in on that trade. So this is actually a trade that I'm in now. I didn't use MACD to actually get into this one, more so price action and candlestick patterns really. But you can see that as this crossed over, prices have started to gradually go down underneath this teal line after the teal line crossed over. Let me bring up an actual stock here so you guys can see. AAP. Yeah, so we'll look at Apple. Again, I know this is Forex, but MACD is a nice tool to know. Here you have two different crossovers happening. We see that the teal line crossed underneath the yellow line right here about 9:30, and then we had this massive sell-off after that happened. And then over here at 1400, this teal line crossed below this yellow line again, and then we see prices start to tail off again after that crossover happens. The same thing happens on the buy side. None of these setups, there's a lot of noise set up right there. Let's go to a daily chart. Let's see it. All right, there we go. And let's clear this up. So down here at the bottom, we see the teal line crossing up and above. And then we see prices, as that crossover happened, prices continue to go up. And back down here, June 26 time frame, we see this teal line crossing up and above the yellow line, and then we see prices going up off of that. The MACD is good for longer term setups, longer term trades. Let me do it on the screen share for a second. It's good for longer term because what happens is it's measuring what happened in previous prices. So by the time you actually see the crossovers happening, you'll notice that prices have already, gone past that really good entry, because we always like to catch it as low as we can or as high as we can if we're selling. But what happens with the MACD and any of these moving averages is what they really are. The price has already played itself out. So the price has to play itself out in order for the crossover to happen. For the market to get strength, that line has to, price have to go up for that line to know that the market is gaining strength. And I don't really use it for a lot of short-term trading, because the MACD and the rest of these oscillators I want to show you, they're late. They're what's called lagging indicators. And I don't like lagging. I like to be ahead of the market. But if you're in a trade and it's more of a long-term trade, you can actually use these more as a reason to stay in the trades longer. So if you see a potential setup on the scanner and you have the range where it's saying to buy, or you have a major support and major resistance area to buy, that's what I use priority versus looking at something like the MACD. Now, once you're in that trade based off that major support or major resistance, based off a harmonic pattern, and you're already in that trade, and then you see the crossover happen, that's when a lot of people are starting to get in that are looking at these indicators, and that's what's going to cause your prices to go up higher. So you're able to get in the market earlier than the people that are using an indicator-based system for their trading. I'm not an indicator system trader. I like patterns and price action and understanding the candlesticks, because they'll give you the better entries. You can get in earlier into the market. So make sure that makes sense to you guys. So if you're going to use indicators, they're more of a lagging. So you might miss that good 20 pip run up you know, somebody that's buying off support resistance, and the people that are using the indicators are kind of come in later, and then they're going to drive the prices up higher after that. How many candlesticks do you use after the move for confirmation of the trend? I am a more of an aggressive person, so I really look for one, sometimes not even one, depending on the actual level that the market's sitting at. So if it's a nice strong level, I'll show you an example of it. I don't even wait for a confirmation. It's not the best strategy for new traders. You definitely want that at least one candlestick confirmation. But as you start to look at certain pairs, you kind of feel how they react to certain things, and I'll kind of show you a couple examples of that. All right, so that's kind of the MACD. Let me get rid of this and get rid of MACD. Delete. Okay, and screen share. Hey, Angelica, there she is. All right. Let's look at the RSI. RSI is the relative strength. And again, I'm just going to click from the indicators list and drag it on over, and then I'm hit OK. And then we see RSI show up down here at the bottom. Now, RSI is a tool that I use very, very heavily in conjunction with my patterns and price action and the harmonic scanner. And by default, what the RSI is looking at is the last 14 candlesticks. So it's basically doing an equation of the open price, the close price, the high and the low of the previous 14 candles. So you can change this based on your strategy. And we'll kind of get into all that, like when we do like some really in-depth analysis stuff on different ways to use the RSI. But the main way people use the RSI is the default settings of 14. So if I kind of just zoom in on here, we're currently on this last green candlestick. RSI is doing the calculation of the previous 14. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. And it's looking at those candlesticks, the open price, the high price, the close, and the low price, those 4 different components of a candlestick. And based on that, it's graphing us along the way at the bottom, letting us know whether the market is overbought or oversold. Now, if the market is overbought, it's going to be above this 70 gray line, this dotted gray line that's kind of going across. This blue line would be above that level. And so what it's basically saying is there's just a lot of buyers in the market, and there's some potential of a sell getting ready to set up. And vice versa, the 30 level, the market is oversold, underbought. Gee, hold on. Oversold is too high. Overbought is too low. Oversold, no, hold on. 70-30. Just remember 70-30. I can't think right now. If it's over 70, there's too many buyers in the market. If it's under 30, there's too many sellers in the market. That's the best way to go about that. Over 70, there's too many buyers. Under 30, there's too many sellers in the market. So you need the opposite end of opposite people to come into the market and basically get this price back to some type of equilibrium. So if let's go back in time on a different chart here, because we don't want to use AUD/CAD because it's not showing us anything. Let's grab Euro GBP. And again, the higher the time frame, the more reliable these indicators and these oscillators are. So kind of just scaling out on this Euro GBP on a daily time frame. I'll kind of grab this box tool up here. We notice down here about this mid-September, that the market is under 30. So there's a lot of sellers in the market. So we're looking for this market to turn around, looking for buyers to come in. And we can see about the same time frame that this market starts to push up. Again, back here on the left, 12 April, under 30. We see that this market begins to push up after that same time frame. And then on the opposite side, we see over 70 up here. We also see a nice green hammer pattern. So this is where you can start using things in conjunction with each other. So let me zoom in a little bit. So green hammer, a lot of sellers were pushing this price back down. If you got a chance to watch some candlestick video training yet. And then at the same time, we noticed that we also had the prices over 70 on the RSI. So we have double confirmation. Now, going back to Stacy's question, how many candles do I look for confirmation? If I kind of see something like this green candlestick up here with this very extended wick, and I already know it's a hammer, the best thing is to wait for this red bearish candle to follow it, because that is a confirmation of the sell. But at the same time, sometimes I'm more of an aggressive trader, and because I see that hammer, I'll just automatically get in right there and put my stop right above the wick in expectation for this market to pull down, because the RSI is over 70 anyway. So I'm more so using the RSI and price action. At the same time, we were up here at the 92.60 level. And I could have did some fib extensions to kind of see if this was a major level. But those 50 levels are levels I really like to watch, like I was talking about the other week, double zeros and 50s. So based on those, I probably got in this trade after the close of this candlestick. But this bearish candlestick, that green one or that red one that followed, if you got in right at the end of it and still sold off, you still see you were very, very profitable. And didn't go into much of a drawdown either. The prices didn't retrace back up. So definitely multiple ways to kind of get into these trades. Now, this is a reason that you don't want to use RSI by itself. And this is one thing that kind of got me in trouble early on, is just because the market might say that it's over 70 or under 30, you don't want to get in just based off of that alone. And here's a good example why. We can see that right here in this May 25th area that the market was over 70. So if you would have got in this market at the same time, you might have been in there comfortably for like a day, if that, because we see that the market didn't really turn around and didn't really sell off. It continued to go higher and higher and higher. And this is one thing that gets a lot of people in trouble if they're just trying to trade RSI by itself or just trying to trade MACD by itself. It's because you're trying to just trade it over 30, under 30 and over 70. And when we kind of do some in-depth study of RSI, you can trade it this way. There's nothing wrong with it, but I kind of give you some little details of, why certain things won't work just trading it by itself. It's the same reason that trading harmonic patterns just because a pattern is there is not always going to work, because there's just other factors that are going on in the market too. So definitely can't just use one reason to get into the market. All right. So that's a little bit about RSI. So if it's under 30, start looking for buying opportunities. If it's over 70, start looking for selling opportunities. And then again, use those major support, major resistance as well. And so if you see it timing out at about the same time, then it's a good reason to kind of get into a trade there. Let me see if we got a good example of one off the top real quick. No, not really there. Kind of back here, we see that there's a lot of wicks, upward wicks up here. So there's a lot of sellers trying to push this price back down with all these wicks in the market. And then again, at the same time, we see that prices are over that 70. And so then the market starts to fall off after that. Down here under 30, then the market pulls up after that. So if you just did it, just use RSI to your trading strategy, there are a lot more profitable trades than there are losing trades if you just did the over 70, over 70, under 30. You just don't want to get caught up in one of those runs like I showed you, where you keep trying to sell, but the prices keep moving up, and up, and up, and up. Okay. Any questions so far? Yeah. All right. And then let's take a look at something else here. All right, I'm going to bring in some stochastic. So stochastic is another one that you'll see a lot of traders use, both stocks and the Forex market. And it works the exact same way. Under 20 and over 80 are my defaults on here. I can't remember if the defaults were 30 and 70 and I changed these, but it's the same thing. So if you guys put it on your charts and it's 70 and 30, that's why. But again, same concept. And it's kind of the combination now of the RSI and the MACD that we just talked about earlier. So you'll see that we also have two lines in here as well. So we have two average lines moving. And once the teal line crosses up above the red line, then that's your buy signal. And then once the teal line crosses down below the red line, that's our sell signal. So we have that along with the actual RSI type components, where if it's under 20, then you're looking for buying opportunities. And if it's over 80, we're looking for selling opportunities. So let me kind of just bring on another chart on here. So we'll do NZD, JPY, and just kind of throw that on here. If we kind of go back a little bit in history here, we kind of look back here and we see that at the same time, we had an over 80 pattern, over 80, and this teal line crossed back below the actual red line there. So based on some candlestick patterns up here, you could have waited and then sold right below this red line, and then the prices would have sold down. So you would have had actually three confirmations right there to get into that sell trade. Again, over here, we were up and above the 80 mark. We start looking for selling opportunities. Now, this is one of those ones that's kind of tricky. Let me get this thing to stop moving real quick. Okay. So we're over 80 here. And again, this is why you don't want to trade it blindly by itself. And this is a trade that would have got me. I know it would have got me because how I trade. So we see that that red candlestick there is a nice hammer, bearish hammer candlestick. I would have got in like right after this candlestick closed at that red line and looked to sell. But we can see that that very next candlestick is a bullish candlestick. So that tells us that this market is not getting ready to turn around just quite yet. So that would have been a losing trade for me. So like Stacy, if you waited for the confirmation, you wouldn't have got in when I got in. You would have waited that next candlestick, saw that it was bullish, and you're going to wait until you see the actual turnaround or some type of some other reason to get in that market. That's why you don't want to be too aggressive. And then if you are aggressive, that's the risk you want to know that you're taking up front. So my stop loss, again, would have been right above it, and I would have got knocked out of this trade. So that's why you don't want to trade just RSI or just stochastic by itself, because we see that it's above 80, but it's also above 80 way back here. And so on a daily chart, we have another 1, 2, 3, 4, 5, 6 days that this thing actually pushed up. And so depending on your stop loss and your risk tolerance, how long do you actually stay in that potential trade? And then this one ended up falling off after a few days, but there is actually like no candlestick pattern for this sell-off to actually happen. So you would have kind of needed another reason to get into this trade if you're trading candlestick patterns. And then down here where we are currently in price, play, we are crossing over. So we see the teal line is crossing up and above. We're under 20. So we have a nice little buy pattern setting up here. So if you guys wanted to kind of take this one on your demo account, you could, based off stochastics. And then we have a little Morningstar or Harmony pattern down here, looking to push kind of up. If I zoom out, trying to look for some major support resistance. We have a little resistance back here, and then we have some resistance back here. So we're kind of in that zone, a nice buy zone as well that we can create. This is a daily chart, so I try to get this down a little bit tighter of a zone, because right now it's about and what's this, 80, so about a 90 pip range right here. So we try to get that zone a little bit tighter, but you can see that we can actually start to create our own trade setups, you know, without having to rely strictly on the harmonic pattern in the cases that it doesn't seem to work for you guys right now. But it does, you know, we can create our own setups in conjunction with it until we get that going. But this is just, once you really start doing technical analysis, you just grab charts and kind of mark them up, and then you see it line up with the patterns. Then you can look to get in, or you look at the pattern first and then you do your own study and see that it lines up, and then you can definitely have more confidence going in particular trades. So this trade right here on a daily, definitely one I'd be looking at for more of a long term. All right, so that's kind of RSI, stochastics, and MACD. Let me bring up one more thing here. All right, moving averages. Let me kind of talk to you guys real quick. All right, so moving averages aren't something I use a lot, but I know a lot of the teachers in iMarkets Live do use them a lot. Moving averages, again, are late indicators, late oscillators, so they don't really give you the best entry points to get in and get out of the markets, but they are very, very, very important looking at long-term trends and even short-term trends, but really the longer-term trends. And so a couple of the ones you guys might want to be aware of, and I'll type them in the chat, are 55. So we're talking about just moving averages in general, and I'm going to show it to you here. So 55 is a major moving average, and I'll kind of talk about that once I talk about Fibonacci and ratios and all that kind of stuff. 55 and a 200-day moving averages, and these are just these are where the markets like to come back to once they've kind of extended away from them for larger amounts of time. You'll notice that these moving averages actually act as support and resistance levels. So one of the things you kind of just want to know in the back of your head, again, I don't use them that often. I actually just started putting a 55 back on my charts to kind of, as we go into the new year, to kind of see where we are in conjunction with the overall landscape of the markets. But it's one of those things that just clutters my chart. So I don't really leave it on there all the time, but I do want to show you guys it because it's something you definitely want to know. All right, now let's jump back over to some screen sharing. So now forgive me because I don't use moving averages on MetaTrader, so I gotta find it real quick. Custom moving averages 13. I don't want to change that one yet. Let's say momentum 14. All right, there it is. So we are going to go under indicators, oscillators, and then we're going to go down here to moving average oscillators, okay? And I'm going to double click this to kind of see the settings. So these are more of the shorter term settings. So you have something called a fast EMA and a slow EMA. So it's estimated or exponential moving averages and slow exponential moving averages. Just really words, terminology. But what I'm going to do is I'm going to change the fast one to 55, and I'm going to change the slow one to a 200, okay? And I'm going to hit OK, and then I'm going to get rid of, man, I don't like the way it's set up on here. I want to show you just on Thinkorswim because I don't know how to read that histogram chart. I hate those. Let me show you on Thinkorswim. If you've ever used TradingView, the online version of the charting platforms, that looks good on there as well. Let me get rid of some of the stuff on here real quick so we don't need MACD. Okay. All right. And let me add one more study on here. Okay. And change this to Now I'm on a daily chart, and I'm going to look at the Euro USD since that's a major pair and clean this up some more. Okay. All right. So what we're looking at are two moving averages. This teal line is a 55-day moving average, and this red orangish line is a 200-day moving average. Now, again, these are just the major ones that people use, you know, like hedge funds and all that kind of stuff. These are the major ones they're actually using. 55 is obviously a shorter time frame than 200. So basically, we're looking at the average price over the last 55 days and the average price over the last 200 days. Okay. Now, it's one of them things where if you're really far away from the 200, then it's one of the things that is just extra stuff on my chart that I don't want on there. So I'll bring it up every so often. 55, I'll use that more often just because crossovers happen more times on that faster time period. So we'll kind of start with the 200-day and kind of scroll back here in time. And again, these moving averages, they really do act like support and resistance level just because so many people are actually watching it. And so we see here as prices started to actually come up to the moving average line of 200, it tried to break above it, but then it broke right back down below it. So if you were selling off the 200-day moving average, you could have sold it here depending on where your stop loss was. You could have still rode this straight back down. Or once you saw that this actually broke back down below this 200-day moving average, then you could actually got back in and sold this Euro USD for quite a few days. As we kind of scroll along here, we see that as we get close back to this 200-day moving average, we go above it. And so now this support level, this moving average acts like a support level now. And so as we get close to it, we can look for buying opportunities off the 200-day moving average. So as we start to go along it, we see that it, it's not going to come back down here. And we get this candlestick pattern. If you have looked at candlestick patterns, whenever you see 3 consecutive bars that are bullish, that's known as the 3 white soldiers pattern. So this is one of those ones for you, Stacy. Just because you asked the question. That's why I keep messing with you. If you're waiting for confirmation, this is your confirmation. Even though it broke above the 200 moving average, the 3 candlesticks is your confirmation. And then after the 3rd candlestick, you were looking to buy and go long. If you don't want to lose, what's this, 109, 108.60 from where this first green candlestick started to 110.80. So you're looking at 108.60, so 40, so 140 pip difference here. You don't want to wait 140 pips to get into this trade. That's 140 pips you lost waiting on confirmation. And then you got to remember, you got to put your stop loss down below here. But if you were getting in based off the 200-day moving average, you could get in anywhere as prices were starting to push up. Let's kind of scroll across here, and you can see that it takes a while for it to get back. Let's bring up a stock real quick. I'm gonna look at Under Armour. Under Armour has no reason to buy, so this is not a good example. Let's look at Tesla. Not Tesla Vision, TSLA. Okay. Tesla is very interesting right now. Let's go back real quick. We saw it break above the 200-day moving average. And then we see, again, this teal line is the 55-day moving average, same concept. So it broke above the 200. That's very, very major. So a lot of investors and hedge funds are looking to go long once they see it break the 200. And then you kind of can stay into these trades, especially if you're long-term trading it. As long as it stays above even the smaller moving average, you can just keep riding this up and up and up and up until it eventually breaks that down below it. And then you can close your positions out. Scrolling across here. So Tesla has some major news with the new little Roadster car that's coming out and everything. And we can see here, but now it's back below the 200-day moving average. So if I was looking to trade this, it's kind of right in a crazy low position right now, because it's above the 55-day and it's below the 200. So it'd be one of those ones I pay attention to for another day to see what happens tomorrow. But because it's below the 200-day, you might want to keep an eye on something like this as potentially going down, because we're under the major moving average. But again, if it crosses below that 55-day moving average on the downside, you're going to definitely look for this stock to potentially go lower. Let's look at Chipotle. And again, the reason I'm bringing up stocks is just because I don't really look at this on the Forex pairs that often. Especially the 200-day. 200-day on the Forex pairs is way, way long. We can see here, because again, I want to teach you guys how to trade more than just Forex. 200-day moving average, we see a nice candle break below the 200-day, and we were riding below the 55. So as soon as you see that break of the major, you can kind of just stay in this trade as long as you're down below the minor, which is the 55, and you can see Chipotle has just fallen off a cliff. And you could actually just been riding this all the way down, starting to go sideways here, and it's trying to catch back up to the moving average. It just broke back up, trying to hold above this 55-day right here. Let's see what else is on sale. Walmart was a one that I'm so mad at myself, because I was actually paying attention to Walmart and stopped paying attention to it once it had this major fall off. But you can see here, once it broke above the 200-day moving average, let me scroll up. Broke above the 200-day moving average. The 200 average held a support. You had two candles close right on it, tried to bounce up. And then you had a nice bullish push off of this candle here, tried to fake people out on the downside. Then it pushed up. Now it's been riding the 55 up. So again, almost like how you can use trend lines, you can use moving averages the same way. Let me back out. All right. And switch over to cursor. And you can see, this is why I kind of like Thinkorswim, because the moving average here is an actual line, versus on MetaTrader, the moving averages is like, I don't know what they're thinking. I like my moving averages on my chart so I can actually see it. Let's kind of delete all of this stuff. Any questions you guys kind of have? I do want to show you guys some Heikin-Ashi charts, so I'll kind of show you that probably next week. Well, yeah, I'll show you Heikin-Ashi right now. I don't like Heikin-Ashi charts on MetaTrader 4. My Heikin-Ashi charts are just a different chart than looking at what we've been looking at, which are these candlesticks. Let me kind of clear this off real quick again. So the candlesticks, we can see the wicks, the highs, the lows, the open and the close price. Heikin-Ashis are kind of like the oscillators, but it's on the candlestick. So they're basically smoothing out the market for those trends. So again, for you guys that want to trade more longer term, you can look at the trends longer with Heikin-Ashis. And it's just the way the charts are set up. I don't remember all the math that goes into Heikin-Ashi. It's kind of confusing to me. But the strategy that you use for them are kind of simple. Again, I don't like Heikin-Ashis on MetaTrader 4. That's why I'm going to show it to you on Thinkorswim. But if you grab the Heikin-Ashi and kind of throw it over, it gives you this crazy looking colors on top of what you already have, and it's not easy to see on your eye. So I'm going to switch over here to Thinkorswim. We'll just bring up USDJPY real quick. I want to get rid of all this stuff. And if I go up here into style and chart type, I can change this so it says Heikin-Ashi. And what this does is it basically does an average of the prices in the chart in a candlestick form. And the strategy is super simple. When I show it to you guys be like, okay, that was easy. And basically you're looking for the colors to stay the same, and it's showing you the trend. So if you see two green candlesticks together, you're kind of looking to stay on the long term. And if you see two reds together, you're looking to stay on the short term. Now, you don't want the candles to be really small, one color or the other. So you're looking for like two nice, distinct candles of that specific color. And then you're kind of looking to go with that pattern until those colors run out. So, for example, if we kind of start halfway here, we see two green candlesticks here, and the trend of this market is showing us up. And until we actually see a nice confirmation red, then you would kind of get out of this trade. Again, this is for like longer term setup. So you're either already in a trade and you're just kind of trying to figure out how long you want to stay in it. We can see here we had two nice red candlesticks. This trend just continued to go down for a few days after that. And until you see, two green candlesticks, you actually just stay into these type of trend trades. There's so many different strategies just around Heikinashis. There's people that just use Heikin charts. They won't even look at the candlestick charts that I just showed you. And so they'll look at more so of these. And it's really more so for the longer term traders. So again, down here, you start to see two candlesticks that are green. That's when you get in for your buy and you go up, and then you see two for your red. You look for your sell and you start to get into it on the sell side. I'll show you guys some more stuff on Heikinashis. Even like the math on how they make them is more so of average prices. So you got to bear with me to try to teach it. But I can definitely kind of show you guys some strategies around how to use it on the basic surface level. So before we jump off, I did see my buddy Angelica jump on. Does your scanner work, Angelica? Because me and Stacy were chatting early on, and hers is still not working. So she's going to contact iMarketSlive to figure out what's going on with it. But I wanted to see if yours was working on JAFX, because that's going to be her next step as well. Okay, yours is not working either. All right, do me a favor as well and put in a support ticket or call iMarketSlive to figure out what is going on with your scanner. I went back and watched the video that's back there, because there was one extra little step after you installed it that you could drag another chart on there and it would update. And that did not work for me on the forex.com demo either. So send a support ticket into them so we can get that, because I think that's the most value of anything they provide is the actual scanner. So we want to get that done. So if or I can do it as well, because I'm gonna push the issue too. So if you guys do it, I'm going to do it as well on my side, and just like send them an email with your what's it, login ID number thing, or whatever they give you, and try to figure out what is going on with that scanner thing. So we can get that up and kind of taking some practice trades on it. If you guys did get the email today, there was a longer term setup trade. I didn't get a chance to watch it yet, so I'll probably try to watch that tonight, of a trade setup that you can kind of take. I will show you guys one that I'm kind of looking at real quick. It's more on the longer term side, and I'll mark it up real quick. A couple minutes here, and again we'll switch over to I'll do it on here. And it's going to be on the AUD USD. So you probably, if you got swipe trades, it actually came out on swipe trades today too, but I was looking at it yesterday before I even got that alert. So now I know multiple people are looking at it. AUD USD. And the trade setup is actually happening on a daily chart. So I'm going to kind of zoom out here for you all. Trend lines. If you're drawing a trend line, it just has to touch in 2 points, at least 2 points on the chart. And so I have a major trend line kind of going up here. All right, got a major trend line coming up here. And then I look for like major round numbers, major support and resistance areas. Right now, this price is at 75.47. The next major round number is 75. So just going to kind of draw 75 on here. If you're trying to use these horizontal lines and you kind of can't get it in the right spot, if you right click on it and go into horizontal line properties, go into parameters, you can actually change the price manually. So if there's a certain price you kind of want this thing to draw it out, so I want to draw it at 75. And then if I look at 75 levels, I can kind of see if there's areas of major support and major resistance. But really, I'm looking at the 75 level because it's just a major key level. And then if I want to quickly kind of throw, let's see, RSI on here at 14. So I can see this RSI is starting to go down below 30. So I definitely want to wait till it goes down below 30. That'll be one of my things I kind of look at. And then if I zoom in here, I want to start seeing some candlestick, some type of candlestick price action, either a hammer or a 3 white soldier pattern or a strong bullish push up off of the levels as it gets to 75. So this is kind of the trade setup I'm looking at. And then when I kind of teach you guys some Fibonacci, or if you haven't already looked at some of the advanced stuff on Fibonacci, we're getting close to some major levels like this 6 to 1 8. So I'm creating this zone off of Fibonacci, off a nice round number, off the trend line. I'm kind of looking at this zone for a long-term buy setup on the AUD USD. Zoom that down real quick. So my zone is actually like a 20 pip range zone. I'm going to have a stop loss below that as well. So there's different ways you can kind of create these setups. It's not a setup that's happening on the scanner. It's not a setup that I've seen on the online, web-based one, because we just logged into it tonight and I didn't go through it. But it is a trade that I'm able to look at for myself just by marking up charts. And then if I see it pop up on the scanner, based off, a pattern that's setting up, whether it's a shark or a bat or whatever, then that's just another reason to potentially really get into this trade and take it. So that's all I got for tonight. A whole bunch of indicator stuff to kind of start to, if you don't look at it yet, you got the whole month of December to kind of take your time with the indicators and stuff like that, because the markets will start to get slow here off Thanksgiving. Yeah, homework. But it's really kind of speeding through it. But like I said, when we do the 8 o'clock stuff, and we'll go like real slow on examples and stuff like that. The main thing right now is just kind of trying to learn the chart and platform, learn how to hit that buy and sell button, understanding your risk, per trade, and then focusing on getting the better entries, the better stops, and all that kind of stuff. But definitely really start to learn how to use the platform. You can see, I told you, I warned you guys I was going to bounce back and forth between the two, just because there's certain stuff on Thinkorswim that it looks better, it feels better to me versus MetaTrader 4. So if you want to learn 2 platforms, you definitely can. But yeah, so no class on Thursday because it's Thanksgiving. So enjoy that time off, that time away. If you guys need anything from me but over the week, definitely let me know. And keep me updated, Stacy and Angelica, with your scanner thing. Again, if we got to set up a little quick Zoom session and help you finish getting in after they let us know what's going on with it, then definitely, because that's like so priority number 1 for me, to make sure you guys get that up and working, because it saves you a lot of time. There were some nice setups on the CAD JPY. I know some people took today, and on the USD JPY. I'll show you real quick because I'm gonna jump off of here. So USD JPY, I know a lot of people took it off the 1 hour here. So it was real close to the entry, didn't quite hit the entry on the 1 hour. And then on the 4 hour, it did touch the entry price down here. It just, price just kind of died like right here at 111.96. And so right now it's up to 112.62. So it's about, if you delete the spread cost, you'd be up like 60 pips right now. So depending on position size, $6, $60, or $600, depending on position size. So that was a nice setup that happened earlier, and it was all based off the scanner. All right. Any questions? Anything? Did I miss anything? All I will send out the recording, and then you guys can hear me trip over overbought and oversold, because I just don't care about the terminology. I just care about what the market is doing. But overbought, oversold, one of the two. If it's over 70, look for sales. If it's under 30 or under 20, look for buys. And you can definitely stretch those levels out to extremes too. So we'll talk about all that stuff on how you can kind of really customize your strategy to what you want to do. All right, ladies, have an awesome evening. I will send this out and I'll talk to you later.